you are an investor in Lyft. And there's been some hand-wringing today when we're looking at the scale of growth. It's still phenomenal, 100% growth in terms of revenue, but it's slowing down as we look over the course of 2018. Something that worries you, or not particularly?
No, I don't think so. I think when any company, any tech company usually has their moments when they slow down in growth, but I think we're excited for Lyft's potentials. I think they are seeing growth. In fact, in Q4, they've seen 47% growth in their riders use at being 18 million riders.
Jaclyn, obviously the big eye-popping number was the $911 million in losses for 2018. They're growing very rapidly along with sales. Is the core business model of ride-sharing profitable currently in your view, or does this model still need to evolve either with something about the rides themselves or additional add-ons like scooters and bikes and all that stuff to sort of really make the business work and actually produce cash flow?
Yeah, I think that they are on track. I mean, I think if you look at their numbers, they are growing. They started with 1% of the market in 2016. And now, there's so much market to gain from that. Most companies do have a loss. We're not worried about that. That loss is decreasing over time if you look at the revenues that are increasing at 100%.
Jaclyn, a lot of the growth in Lyft as well as Uber, it was kind of done in sort of this regulatory gray area, at least in a lot of cities, particularly here in the U.S. And I'm wondering that as this company sort of transitions into a much more of a public sphere with regards to its stock, how is the company going to address the fact that a lot of cities really are sort of gunning for these ride-sharing companies to get them to either shoulder a little bit more regulatory burden and potentially even a little bit more cost?
That's a great question, and I would say, of course, there's going to be regulatory issues, but what Lyft is doing that I'd want to focus on more than, burdens on the regulation is that they are helping communities all over the country. The numbers that you could see in the S1 said that 47% of the riders are actually exploring their cities more. And in fact, in 2018, $2.5 billion were put back into the city in an increase for Lyft riders.
But what we do see is a driver tends to work not just for Lyft, but also works for Uber, might work for Juno if you're here in New York. It's interesting what Lyft is trying to do in terms of offering bonuses to their drivers, to try and get them on board with the IPO process. What's this all about, and how important is the relationship with the driver, and what about autonomous driving?
The relationship with Lyft and their drivers is massive. It's very important to have a good relationship with both the drivers and the community. And while they might be giving bonuses, this is a way that does not undermine what they do to get these people on board. They have, customer service, and they have training for these people. You can't just sign up. There's a lot of, hoops that they have to jump through in order to be a driver that's worthy of getting on Lyft. But sure, they are trying to get people to come on board and expand their market. But if you're not getting the stars and the right ratings, you're not going to stay on the platform. So, they are keeping their standard high.
Jaclyn, how much is riding on the investor appetite ultimately for Lyft? Because we know this is a year when we expect to see several IPOs from the so-called unicorns, these companies that are quite mature, at least from a revenue standpoint, finally coming to the market. Is it, in your view, for these other ones, perhaps waiting in the wings or coming close? Is a lot riding on the uptake here?
Sure, I think. Yes, a lot is riding on Lyft. Lyft is making history. They are the first ride-hailing business to go public. So everyone's watching, whether it's this specific ride-sharing or if it's tech in general. People want Lyft to be successful, and they definitely want to see what happens.
You're also in Palantir at Oceanic Partners. This is a company that many debate potentially coming to the market. Is it something that you see coming for 2019? Do you see any of your portfolio companies thinking we've got to get in 2019?
Yeah, I think everyone's considering it. As you probably know, it takes time to go public. So, that maybe they start the process in 2019 and go in 2020. But certainly a lot more companies are thinking about going. And hopefully Palantir is one of them.